Welcome back to the second part of this session. So just before we start, let's just quickly have a look where on BC Learn you guys will be able to find the information. Okay, so I've put mine so it looks similar to what you guys have. So on your left-hand side, okay, the first thing is you need to go select your module. So you will have a bar at the side, you click on courses, and then you go select your specific module. In this case would be ACB5121 and then BCP1. Okay, you click on that module, then you will see there is a pane on the left hand side that has all your information. Now sometimes what happens is it will look something like this. Then just go hover on the left hand side and then it will give you a blue line. You click on the arrow and then it will expand this information. Now, the key information you guys need currently is if you click on the learning units, they list all the learning units for the semester on there. And if you click on that specific learning unit, it will open all of the information, like your learning unit outcome and all the themes will be listed on there. Okay. Now that is learning units. So that is where you will find the learning units as well as the additional activities on BC Learn. So you just click on the subsections and then it will open up a new screen. Now the additional information that I've been loading on for you guys, you will find under more resources. You will see there's a folder that says lecture slides where I've loaded the lecture slides for today. ICE activities. So that is the test, little online test that you will write for marks will be loaded on here and then will be made available when you need to write it. If it's online, I generally leave it open for 2 weeks because I know we do have load shedding, people do have connectivity issues. So if you do not have enough data to do it at home, you can come do it on campus and still get a mark for that activity. Okay. If you have issues with an ICE activity that you cannot access it or something happened, just let me know. The first ICE activity that you guys will write on Friday, I've said that you have at least 2 opportunities so that if the first one, when you're getting the feel for it, you struggle, you still have an additional opportunity to improve your mark. Then the LACs, so this is for your LAC classes. If you click on that folder, the specific information for a specific class will be loaded on there for you guys. And then the lesson plan and resources, so that is a summary of each learning unit where you will find all the information as well as the short videos can be found in this folder. Okay, so this is just where on BC Learn you find it. Then the recording for today, if you go to Blackboard, it will open up the screen. This is where you, okay, so currently we're in progress in that session. If you click on this up there, you got session recordings. If you go to recordings, currently there will be nothing there. Okay, so the first recording is there. You click on these little icons and then you can download it. Now, important to note is because of the amount of data these things are loading onto the system, the videos will only be available for a week after the class. So please make sure that you download it so that you can watch it at a later date if you want to. Okay. So let's then go back to our slides. Okay, so we discussed double entry. Your debit side and your credit side needs to always equal. So who can tell me, based on this example we have on the screen, what is the debit side? What account do you think it would go to? And what is the credit side? What account do you think it might go to? Okay, so let's just repeat that again. Based on the example where Joe buys 10 books for 100 Rand and pays the shop cash, what would the double entry be in this example? So what would you debit and what would you credit? Okay, so we debit bank. Okay, so remember when we debit bank, because bank is an asset, we are saying we are in effect increasing the bank. And you say we credit stock. Okay, now you need to look at who we're looking from. So in this case, Joe buys the books for 100 Rand and pays the shop cash. So if we look at the shop, yes, they would receive 100 Rand cash, which is debiting the bank, or if it's petty cash, then it would be petty cash. And we are giving out 10 books, so we're reducing our stock with 10 books, which is the credit stock, which makes our stock less. Okay, but in this case, I looked at it from Joe's perspective. So Joe had an expense of 100 Rand, so he bought books, which is an expense in his life, and he paid cash of 100 Rand, which is a credit. But the way you guys have interpreted it from a company's perspective, it would be correct as well. So we would have debited the bank or the cash on the other side, and we would have credited the inventory or stock. And as you can see, the left side is 100 Rand, which is your debit. Your credit side is the right side, is 100 Rand, and that equals, which means we've applied the double entry accounting system. Now, how do we know if it's a debit or a credit? Who can tell me? What is the general rule to know if it's a debit or credit? What's the basic rules? How do we know if it's a debit or credit in a double entry accounting system? Do we have any takers that can tell me how do you know if it's a debit or a credit amount? Okay, so we've got a suggestion to consider how it affects your total value. Might explain if you know if it's a debit or a credit. Okay, so let's start with the basics. How do you know it's a debit or a credit? Okay, firstly, you have to decide on the T account, your general ledger account. If it's a debit, it's always on your left-hand side. If it's a credit, it's always on your right-hand side. Now, to further know if it's a debit or a credit, in the next session on Thursday, we will discuss the general rules on when do you know when to increase an asset or decrease an asset, increase liabilities, decrease liabilities. Okay, so there's specific rules that tells you whether it's going to be a debit or credit based on whether that account has increased or decreased. And that's how you actually know if it's a debit or credit. And then the basic rule is debit's always on the left, credit is always on the right. Okay, so that is the basic rule, and then the more complex rules we'll discuss on Thursday. So that's how you're going to know which side of the account it should be based on, we call it a little acronym that's called DEAD click, which says you debit your expenses, your assets, and your drawings, and you credit your liability, your income, and capital. But we will recap that again on Thursday. So there's specific rules that help you to know when to debit something, when to credit it, and it's unfortunately just something you'll have to learn. Okay. Now, why do we actually record financial information? Now, what you can see here, you have accounts, you can do personal accounts, you can do real accounts, nominal accounts. So your personal accounts, you're a receiver, so you debit it, you're a giver, you credit it. So I pay it or I receive it. If it's real, it's incoming, so it's real money I received, I debit incoming money, I credit outgoing money. And that's nominal. Nominal is your income and your expenses. Your expenses or losses are always debited. Your income and your gains are always credited. So these are just some of the rules. Now, if we think of accounting as a game, in order to play any type of game, you need to know the rules before that. Now, if we don't know the rules, we'll never know who wins or who loses a specific game. Okay, so let's take, for example, like Uno. Most of you should know what Uno is. If we take Uno, do you think it's important for Uno to have rules? And why do you say it is important, or why not? Okay, so if we take Uno as an example, do you think it's important for us to have rules in that game? You can either type your answer in the chat function, or you can put on your mic and just answer. Okay, so Benita Michaela says, yes, it is important for us to have rules for a game. Now, why do you guys think it is important to have rules? Okay, so the feedback we received is so that everyone isn't doing their own thing. Now, that's correct. If we do not have rules in a game, and Benita says without the rules, the game would not function correctly. Okay, so let's take Uno now, for example. If we did not explain what a plus card means, and that, for example, that you're not allowed to put a +4 and a +2, or you can't put a switch directions on a plus card, let's take that as an example. Then people would just throw out their cards at random as they feel like it, and there would be no consequences. But if we play the game the way it was meant to, it would actually mean someone needs to pick up cards, and at the end of the day, they would potentially lose the game, and then someone else would be able to get rid of their cards. Now, if we didn't have these rules in play, everyone would almost finish at the same time, or no, there wouldn't be a definite winner or loser. And then you can make up the rules and how you feel like it as you go along. Now, that is what happens if we do not have rules. Now, if we take that and we compare it to accounting, why do you think in accounting is it important that we have specific rules for accounting as such? So I'm just going to repeat the question. Why do you think accounting should have rules? Come on, guys, it's not a trick question. It's very similar to what you've already said. Okay, so Tumelo says rules are there to keep order and for us to know what's right and wrong. Okay, correct. Mihaela says so there's a general understanding. Neil says so tax authorities know how much tax is owed. Okay, Mapaledi says to help guide actions toward desired profits. Okay, so all of your feedback is good suggestions and good feedback. Thank you, guys. Okay, so the reason why accounting should have rules. If we do not have a set of rules of how it is done, each set of accounts would be done differently, and at the end of the day, the users of those accounts would not be able to rely on that information because they will not know if what has been captured or documented is accurate reflection of what's really happening within a business. So that's why we have specific accounting rules so that when I take business A, business C, business E, and F and compare all of their accounting records, I know the same rules have been applied. And then for that reason, I can now take their information and know it's accurate. And I can compare it to one another and see how are these four businesses compared to one another. Okay, so that's why we should have accounting rules. Another reason is, let's say I am the accountant for Coca-Cola and something happens to me today, I am unable to go back to work tomorrow. If we do not have a normal set of rules, it will be very difficult for someone else to take over my role and continue where I left off if we do not follow the same rules or principles, because they will not know what I have done and what structure I've used in documenting the information. So that is also another reason for it, is to make sure that someone else will be able to get to exactly the same result if they apply the rules that is the general accounting principles. Okay, and the last one, who do you think sets the rules? This was one of our Kahoot questions. So, or in our Kahoot questions, so it's IFRS is the accounting rules, and it is set by the IASB, which is our International Accounting Standards Board. They actually set the accounting standards. Okay, now this information that you just need to be aware of the fact that Bob changed to IFRS. Okay, so that's the first thing you need to be aware of. Then something else that in your textbook that you need to be aware of is in accounting we have different terminologies. Now we've got the lingo which we use on the floor or in office, which is, for example, we'll talk about debtors and creditors. But then you have financial lingo, which is specific for your set of financial statements, which is created so that it's internationally exactly the same. And that would be your trade receivables, trade payables, cash and cash equivalents. So in your textbook, they've got a table with terminology that is interchangeable. It means exactly the same thing. It's just what we generally use when we talk accountants amongst each other, or what do we use in our financial statements. But it's exactly the same. Then the other thing is internal versus external reporting. That is our financial accounting and financial management. We're going to do an activity which focuses on that. So I'm just briefly going to touch on it. So that is just to know who do we actually use the information for if we draw up an internal report, if we draw up an external report, what type of information. So normally internal reporting always for management of a business, whereas external reporting is generally for your stakeholders. So the type of information we would record or report on would be different. Internal, we're trying to run the business, see how we can change procedures or processes within a business to make it more profitable, to streamline it, whereas external, we want to show the investors or the users that the company is performing well, they're profitable, you will get a return on your investment. We are able to settle any debt that is due and payable, or we will be able to pay any creditors we have, we will be able to pay our employees. So that is the reason. Then we've got our fundamental qualitative characteristics. So these are the main characteristics that each set of financial statements have. So you need to be aware what is the different characteristics and what each one means. So let's quickly run through them. So relevance is the information that we've accounted for or disclosed in our financial statements. They are relevant to the users. So that means the people that look at these accounts, they actually want that information in there, and they are able to use that information to make decisions. Faithful representation is the information that has been disclosed in that document is accurate, it is accurate or reliable, and it shows all your material amounts. Now, material amounts is any amount that would influence a user's decision making. So a 10 Rand might not influence someone when they look at the assets, but a million Rand might change their opinion on a course of action. Comparability means I can compare one year to another year, and I can compare the different line items because the information is captured under the same line items. Understandability is that any reasonable third party that has a basic knowledge of accounting should be able to understand what is going on in this set of accounts. Timeliness is the information that has been recorded within a reasonable time frame. So we have recorded it maybe in a month or two after year end and not 2 or 3 years afterwards. So the information is still relevant to be used. And verifiability is there is source documents that we can trace all these transactions to and verify or agree the amounts to make sure that they are actually accurate. Okay, so what I want you guys to do in your textbooks on page 15, we are going to complete question 1.3, but we're only going to do subsection 1. So what I want you guys to do in your textbooks, you can just take a pencil and just tick it off there. I want you guys to identify between the information on the left-hand side. They give you a statement. So let's take the first one. It says provides information mainly for external users. Now I want you to then indicate whether you think it is a financial accounting role or a management accounting role. Now, very important, when you think of it, you need to think, is it for internal users or external users? Now, how do we know which of those two accounting roles go with which user? Now, management accounting is management accounts, which are always prepared for your management or your directors, which is in a company, which is internal, whereas financial accounts is prepared by your bookkeepers for your external users, which is your stakeholders. Okay, so just bear that in mind when you do this question. So I'm going to give you 5 minutes, and then we're going to do a feedback session where you guys can indicate whether it's financial accountant or management accountant. So I'm just putting it up on the screen for you guys. So this is what you need to complete. Okay, so let's go through question 1.3. So in the chat function, what you guys can do is I've given the abbreviation at the top of each column. So you can just type in whether you think it's FA or MA for the first line item. So let's start. So the first one is provides information mainly for external users. So who do you think provides information for the external users? Would that be your financial accountant or management accountant? Okay, so most of you think it is the financial accountant. Okay, and that is correct. So let's look at the second line. Generates general purpose financial statements. Okay, who do you think would generate general purpose financial statements? Okay, so you guys think it is financial accountants will also generate your general purpose financial statements. So it's a set of financials which is specifically for more than one type of user, and that's correct. Okay, makes more use of subjective data. Who do you think makes more use of subjective data? Okay, so that would be your management accountant. Would use more subjective data. So that is data which requires your interpretation. Okay, future orientated reports. Who will look more at what's going to occur in the future? Oh, sorry. Okay, so unfortunately I gave that away. That is your management accountant. Okay, so your management accountant is the one that looks more at what is the cash flow in a few months' time. How's our products doing? We look at sales trends. So what can we expect going forward? Whereas your financial accountant, like I previously says, look more at your historical data. Okay, who emphasizes objective data? So who needs objective data? Okay, so you guys think it is the financial accountant who looks at objective data. Okay, now considering our management accountant looked at subjective data, that would be reasonable to expect that it is our financial accountant. So that's correct, guys. Who provides information mainly for our internal users? Okay, so seeing our external users are done by a financial accountant, internal users are mainly the management accountant that creates reports for management to use. Okay, who must conform with standards that are externally set? So that is rules that are set outside of the firm. Who do you think needs to do that? Okay, so you guys are absolutely correct. That is our financial accountant because they need to follow the IFRS rules. Who generates specific purpose financial statements? That's correct. So it's our management accountant. Now, the reason it's specific is because management would ask for specific areas of information. So they won't create a report with all the information. Management would, for example, say, let's use Coca-Cola. They will say, okay, can you show me what is the profit margins if I use Coke Light versus if I compare it to Stony? And show me how many bottles of Coke Light versus Stony is sold within a quarter and who is our general market profile. Okay, who reports on financial events of the past? Who do you think reports on historical data? So financial information of the past is historical data. Okay, so that's correct, guys. You said it's financial accountants. Yes. Who is not subject to externally set standards? It's your management accountant. That's correct. Okay, so this is, oh, sorry. So this is just a recap or an extract of one of the short videos that you guys will have for homework because I only loaded it up yesterday. So this is explaining the accounting cycle and the different transactions and the flow of information. So the accounting cycle is the process that we follow when we capture or we write down financial information and record it to get to our financial statements. So the first thing, we've got a transaction. Now, a transaction, for example, is when you bought your Coke or your bread or your milk at the shop. That is seen as a transaction. That happens on a daily basis. We capture it on a daily basis. For each transaction that occur, there is a source document that also occurs on a daily basis. Now, source documents can either be, we call it paper-based, so it's a physical piece of paper, or it can be electronic. So that is, for example, if I make a payment online, I can get a proof of payment from the bank, which is the electronic document that I see online. I don't physically have it in my hands. Now, once I've taken all of these source documents, we go capture each transaction in our journal. So we journalize the transactions based on the source documents we receive on a daily basis. Then at the end of the month, we transfer the totals from those journals into our general ledger, and that occurs on a monthly basis. And then we transfer the balance from our general ledger to our trial balance, which is a summary of all the general ledger balances at for a specific month. And then at the end of the year, so after 12 months, we take all of that trial balance information, which will show 12 months worth of data, and we transfer it into a set of financial statements. Okay, and that information is then used by our stakeholders to analyze what is happening within a business. Okay, now looking at these transactions, we've got 8 transactions here. So the first one is we identify a transaction, we record the journal entries, post the ledger entries. Then we've got our unadjusted trial balance, so that's before any adjustments are made at month end. Then we do adjusted entries, so that's, for example, where we need to do an entry based on the accounting rules, which does not have a specific source document. We create an adjusted trial balance, and then that goes into our financial statements, close the books. Now, based on this cycle that I've written down here, which numbers do you think represent our bookkeeping cycle? And what do you think represents the accounting cycle? Okay, so bookkeeping, just to think about it, bookkeeping is what an accountant does on a day-to-day basis every month. That they normally record something, where accounting is what your accountants do at the end of January, at the end of the year, or closer towards year end. So based on that information, what numbers do you think represents our bookkeeping cycle? And what numbers do you think represents the accounting cycle? So let's start with bookkeeping. Numbers, what do you think is our bookkeeping? Okay, so which numbers on the screen in the cycle that I've got on the screen represent your bookkeeping cycle? Okay, so what numbers do you think represent our bookkeeping cycle based on what I said bookkeeping is? If bookkeeping relates to daily and monthly type of transactions or recording of transactions, which numbers do you think would coincide with those? You can just type your answer in the chat function for me, or if you want, you can put on your mic and talk to me. Okay, so Mappa Lady thinks it is 2, 5, and 8. Okay, do we have any other takers? Okay, Tumele Melo think it's 1, 2, 3. Queasy thinks it's 1, 2, 3, 4. Anyone else? Okay, so some of your answers are correct. There are a few things that you've omitted or incorrectly added. Okay, so let's quickly look at it. Things that a bookkeeper is responsible for is transaction 1 up to transaction 6. The reason for that is we said you identify the transactions on a daily basis. We record those journals on a daily basis. Then we post our ledger entry, so that's our general ledger, every month, and then we create a trial balance. Now, our adjusted entries for that trial balance, we normally do it at month end to make sure we put any entries for tax purposes or accounting standards, transactions, we reflect that at the end of the month, which then brings us up to the adjusted trial balance. Okay, which is transaction 6. Accounting cycle is only number 7 and 8. So your accountant will create your financial statements at the end of a 12-month period, and they will close off the books where they then calculate the profit and loss for the year and transfer that to your owner's equity. Okay, so this is just something to think about when you go read the information. Again, it will make a bit more sense. Okay, so what I want us to do, a group activity. I will divide you guys into groups shortly. So what I want you to do is in your textbooks, page 18, we are going to discuss what do you think the term accounting means. So I want you guys to create a definition in your own words. So put it in lingo that your fellow student will understand. And then the second thing is, what do you think the term bookkeeping means? And then give it definition. So I want you to give me a definition of accounting, a definition of bookkeeping, and what do you think is the main difference between the two? Okay, let me quickly assign the groups. Okay, so I'm going to create 5 groups. So you should have moved into a group. Okay, can all of you hear me? You should be back in the group. Can all of you hear me? Okay, can you just in the chat function let me know if you're back into the main group, if you can hear me? Okay, great. So what have you guys decided is the difference between accounting and bookkeeping? You can just put on your mic and just tell me what you guys have discussed in your group and what you feel is the difference between the two. Okay, I see Walter says accounting is the process of recording and summarizing all transactions in the business to make it comparable and easily understandable. It is more subjective to give the business owner insights on what decisions to make. Bookkeeping handles the day-to-day task of recording financial transactions. Okay, thank you, Walter. Any other feedback from the other groups? Are you all happy with that explanation? Okay, thanks for all the feedback. I see we came to the end of our time. So I just quickly want to focus on this. These are the key terms. They're on page 19 and 20 of your textbooks. Please make sure that you know these definitions and what each of them are, because it's very important for you to understand the terminology to be able to, when we do the physical journal or general ledger, that you know what we are referring to and what the purpose is. So the key terms have been summarized in your textbook on those pages. Make sure that you know it. Okay, and then source documents, this is just an example of what it looks like. Okay, so for homework, I want you guys to please go through the questions in Learning Unit 1 that we did not discuss in class today. The reason for it, a lot of it has research, so you have to go think about it. So I want you to go do the questions and work through it. Then go watch the short videos on Learning Unit 1, part 1, under more resources to help you reinforce what we've discussed so far. And then to read pages 23 to 49 of Learning Unit 2. This is just so that when we get to double entry accounting on Thursday, that the concepts aren't foreign to you guys. And then if you have time, watch the short videos on part 1 and part 2, which focuses on the information that's covered on page 23 to 49 in preparation for the next class. Okay, so thank you very much for joining today. And I want you guys to have a lovely day. And if there's any questions, you are welcome to ask me before we log off. Is there any questions about what we've discussed today, or are you all happy with it? Okay, if you don't have any questions, you're welcome to log off. I'll see you guys on Thursday. Have a lovely day, guys. Benicia, I'll quickly share the screen again. Angela, yes, there will be a recording of the session. It will be where I showed you on the Blackboard Collaborate. I will also send the document during the course of the week just to tell you guys where exactly to access this and how to get there. Okay, Rafilwe, if you've not received your textbook, then maybe just do the short videos for now that's loaded onto VC Learn. That will sort of give you some idea of what's being covered in the textbook as an interim, and then you need to just follow up on your textbook, okay?